Now, before I get into detail, here is my current Vanguard portfolio. Now, 3 weeks ago, I invested £1,000 and it's already, by complete fluke, up 8.5%. Now, before I explain all of this in detail, this is not typical performance. This was just sheer luck and a complete fluke that I put my money in 3 weeks ago at a bit of a dip in the market, and it's since gone up 8.5% in just 21 days, which is awesome, but I don't want to encourage people to think that this is going to happen every single time you invest some money. But so far, for my first £1,000 I invested into Vanguard, I'm currently up £83. It just goes to show, because we don't know what's going to happen in the stock market, I invested my money into a dip, it's gone up, and I'm sure that I'll level out at some point throughout the rest of this year to at least have a good gain this year, but find some happy medium in between, or it even might go up a little bit further over the next few months. So we have a brand new tax year, which means there is a new £20,000 allowance this year to put money into your stocks and shares ISA, which is great. Now, I consider myself quite a lazy investor. I'm not researching companies every single day and seeing what's happening in the news that you would expect an analyst in an investment bank to do. Instead, I just put my money into big index funds like the S&P 500 and the FTSE 100 and just let my money sit there, because I know it's invested into massive companies that are pioneering and innovating all of their products, technologies and services, and over time they're going to create profits, which is going to push up their share price. So now I've explained that, let's get into the detail of where I've invested my money on Vanguard to get those kind of returns. So I invested into two different funds. Let's have a look at the performance here. Firstly, the first fund that I invested my money into was the US Equity Index Fund, the accumulation one. So an accumulation is where the dividends are reinvested back into the platform, whereas if you have an income fund, or INC, then that's where you'll start to take out the dividends as cash, where it's not reinvested into the entire fund. So this has done really, really well. I put £499.99 in, so pretty much £500, and in 21 days, it has gained £45.64, which is a 9.13% return. That is bonkers for 3 weeks. Usually you would get that in an entire year, and when you compare that to a savings account in a bank, you'd get 0.1%. That is a huge difference to a 0.1% savings account that you'd get in a single year. So that's really, really good. I've also invested into the S&P 500 as well, which is a really, really favourite fund of mine. It's the top 500 US companies. It's got a lot of the tech stocks in there as well, and just general big American companies. I put just shy of £500 in there, and have also gained an extra £36.48 off the back of that as well, with 7.49%. Again, which is really, really crazy for 3 weeks. I'm sure this will average out across the year, but I think this year is going to be a strong year and will end up overall at the end of the year, which is really good. I think the reality with a lot of the tech stocks that I've seen so far this year, a lot of the big tech companies, when they announced their year-end results for 2021, Google, Facebook, Amazon, all of those were projecting really good profits, and they didn't quite hit them last year, which meant that the Nasdaq and all the tech stocks and part of the S&P 500 took quite a bit of a hit in Q1 this year. But now the tech companies are starting to get towards the half-year results, and I think they're showing really, really promising quarterly returns. It's looking really, really good. Now the war isn't brand new in the news, and we understand what the new norm looks like with the Russia-Ukraine situation. It feels like there's a little bit more stability now in the market. To show you these two funds in a little bit more detail, we can go to the what we offer and then the full list of funds on the main homepage of Vanguard. And then what you'll see here, if I go onto US and open these up, so I've got this one here and that one. So the first one, which is the S&P 500, so if you go onto the page here, you can look at all of the different details in this particular fund. So it has a risk rating of a 5 out of 7, which is usually what I tend to go for. So it's the medium-high range wherever I put my money. It's fine for an ISA, which is no problem whatsoever. Over the past few years, it's had a really interesting difference. So 2020 to 2021, so it was a bit of a crazy year with the pandemic. Stocks plummeted and then they absolutely skyrocketed at the same time. So that had a 55.9% increase, which is very, very rare and bonkers, but it happened, which is really good for those who invested into it. Last year, it had a 15%, which is way more normal for the S&P 500. And before that, there was actually a minus 7% loss in that particular year. But otherwise, over the past 5 years, they've had some really, really good gains in this particular fund. The portfolio is made up of, as you'd expect, majority IT. It's US, it's the top American companies. And in terms of the holdings, Apple have some of the biggest, which is 6.9% of the fund. Microsoft, Amazon, Alphabet, which is the parent company of Google, Tesla, Nvidia, Berkshire Hathaway, Facebook, United Health Group. So a lot of this is very, very tech heavy, which is my favorite, but you can also just look at the weighted exposure, looking at all the different industries from health, consumer discretionary, financials, communications, energy, materials, real estate, etc. to get a view. So this is very, very tech heavy, this one. So if the tech sector took a tumble, this fund would definitely see an impact off the back of it. Compared to the other one, I'd say this is very, very similar. Again, it's got a risk rating of 5. It's had a similar-ish performance over the past few years. Again, massive, massive increase 2 years ago. Marginal, obviously marginal, 16% is still good, but last year, a kind of 15-16% increase. And then before that, a little bit more modest, going back to 2017-18 as well. The portfolio also looking very, very similar. So you can see here that it has a very high IT tech sector weighting into the fund. And again, you've got the top 10 companies, Amazon, Apple, Microsoft, Alphabet, Tesla, Nvidia, all the same there. Now, it's not the best advice just to copy what you see on this video, because a lot of my portfolio, through my own choice, is invested specifically and quite heavily into one sector, and especially into one country, which is US and tech. Now, the best thing to do is spread that across as many different regional zones as possible and spread your money over the world in different financial markets, which is the best way to protect yourself against any financial risk and different dips in the markets that we might see over the next few years. The reality is, at the moment, I'm seeing really high gains, but the risk is that I could also see really large losses at the same time as well. But that's a risk that I'm willing to take on, and so far has served me well in my portfolio. So if there are any dips in the future, at least overall, I'm still up over the past few years based on positive performance. Now, in case you're wondering with Vanguard, Matt, why have you not put your money into a stocks and shares ISA? Well, on Vanguard, this is a general investment account because my main stocks and shares ISA is currently sat with Fidelity for this tax year. The main reason behind this is because I invest a lot of my money into the Fidelity Global Technology Fund, which has seen some awesome gains over the past few years and is a little bit more diversified than some of the Vanguard funds. So that's where my money is currently invested and getting good gains throughout the year. Also, even if you have a general investment account, you can still claim up to £10,000 a year tax-free out of your capital gains allowance. The money that I have in here, as long as it stays low, I could have, say, £10,000 in this general investment account and be gaining 10% a year. I could take out £10,000 every single year tax-free, and I still wouldn't even get close to that particular limit. So that's why it's in here. It's still all tax-free because I would never put all of my money into an account where it'd be taxed. So stock markets are typically driven by world events, emotion, and fear all combined together, as well as different seasonal changes. Now, I don't mean the weather seasonal, but for example, with the current Russia and Ukraine situation, that tends to impact a lot of the stock markets because it creates this uncertainty all over the world. The markets then respond to that, and as we find the new normal and understand the impacts of these big world events, everything starts to normalize over time. When you look at the S&P over the past 5 years, if you would have put your money into the index fund in 2018, you put £1,000 into there, now in 2022, that'd be worth almost £2,000, and your money will have completely doubled over the past 5 years. For my portfolio this year, the tech stocks have done a little bit bad this year. A lot of them missed their end of year earnings when that was all reported at the end of 2021, so it's been a little bit tough. But now we're going into quarter 2, I'm starting to see a lot of those companies do really, really well. So the portfolio continues to grow over time. But that being said, some of my funds dropped by almost 36%, which was really scary at the time. But the reality is, when you look at the context, a lot of the tech companies did really well during lockdown. They were booming. Obviously, there was the big dip in all of the markets and then the huge surge after that. But then as the pandemic started to come to a little bit of an end and the world saw new normal, people going out again, a lot of the tech companies saw missed end-of-year earnings because people were spending more time outside rather than using online services like they were the year before. So that's a good example of a world event. The market starts to go down a little bit and now it's finding a new normal and starting to go up again, which is really exciting because I'm seeing those gains improve over time. So there you have it. I opened an account 3 weeks ago and I have 8.5% return so far. I'm sure over the year that's going to average out, and when we get to the end of half one point in the year, we'll start to see all of the half-year reports from those big tech companies, and that might start to change the market because we saw a dip last year because of the lower than expected earnings. It could happen again, we just don't know at this stage, and I think that's when we'll start to see some kind of normalization within the S&P 500 and all of the tech stocks later this year. If you found this video useful, then definitely check out this here, which is the top 6 mistakes that a lot of brand new beginner investors tend to make when getting started in the stock market and opening a stocks and shares ISA. So check this out here to make sure that you don't make these mistakes too.